You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 16th day of April, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here or right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's reserved for members only and those who are taking their 1-week free trial. That's our live training room, 9:30 a.m. to 11:30 a.m. Eastern. Now, when the live training room ends, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. I said yesterday I was going to check and see if we had ticked over 2,800. I think we probably have, but I haven't looked at it, so maybe I can tell you tomorrow. Okay. Now, this is our daily schedule for the afternoon broadcast. Oh, let me mention, if you're new to the world of CFRN, the YouTube channel is a great way to get to know who we really are and how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch all of those, nor do you need to. but it's a nice resource to have available to you. And one, it kind of shows you day by day how we've evolved and that we've been around for quite a long time, which in this industry is, to say the least, a little bit unusual. So, we'll dive into our daily devotional. The topic this week is Holy Week and Easter. Now, Monday we started with Palm Sunday. Yesterday we talked about Holy Monday. Today's Wednesday, but today's topic, you guessed it, Holy Tuesday. All right, see how that works? Okay. Today's scriptures, Matthew 23, verses 1 through 12. I'm going to share it with you from the Message translation. Now, Jesus turned to address his disciples, along with the crowd that had gathered with them. The religion scholars and Pharisees are competent teachers in God's law. You won't go wrong in following their teachings on Moses, but be careful about following them. They talk a good line, but they don't live it. They don't take it into their hearts and live it out in their behavior. It's all spit and polish veneer. Instead of giving you God's law as food and drink by which you can banquet on God, they package it in bundles of rules, loading you down like pack animals. They seem to take pleasure in watching you stagger under these loads and wouldn't think of lifting a finger to help. Their lives are perpetual fashion shows, embroidered prayer shawls one day and flowery prayers the next. They love to sit at the head table at church dinners, basking in the most prominent positions, preening in the radiance of public flattery, receiving honorary degrees and getting called doctor and reverend. Don't let people do that to you, put you on a pedestal like that. You all have a single teacher, and you're all classmates. Don't set people up as experts over your life, letting them tell you what to do. Save that authority for God. Let Him tell you what to do. No one else should carry the title of Father. You have only one Father, and He's in heaven. And don't let people maneuver you into taking charge of them. There is only one life leader for you and them, Christ. Do you want to stand out? Then step down. Be a servant. If you puff yourself up, you'll get the wind knocked out of you. But if you're content to simply be yourself, your life will count for plenty. Again, that was Matthew 23, verses 1 through 12. So, by Tuesday, remember we started with Palm Sunday, then Holy Monday, now we're up to Holy Tuesday. By Tuesday, Jesus' unwillingness to obey the religious elite had made him an enemy to Israel's leaders. They challenged Jesus with their assumptions and doctrinal traditions, hoping to publicly prove that Jesus is a fraud, a criminal, and a liar who is set on disrupting their control. Oh, man, does that parallel what we're living through today? Unbelievable. But Jesus keeps telling the truth, showing the leaders how the mistake is their own. What irony. They're mad at God for not being godly enough according to their judgment. Jesus predicts that the Roman armies will one day surround Jerusalem and destroy the city and its temple. But his disciples struggle to understand this and ask him when it's going to happen. In a speech sometimes referred to as the Olivet Discourse, Jesus gives a few vague images of what's to come. He predicts his death, but also assures the disciples that his death will not be the end. He says he will resurrect and continue living after death, before eventually returning to fully establish his kingdom on earth. Jesus cautions the disciples against trusting people who say they know the signs of the end times. Those so-called signs like natural disasters, wars, and rumors of wars are normal parts of the world being renewed. Instead of losing focus by getting wrapped up in that fear, Jesus urges his followers to remain focused on him and follow his loving way. Keep living into the kingdom of God, he says, and don't stop spreading Jesus' good news to all people. Let's pray. Heavenly Father, we pray that you would keep us from pride and hypocrisy. Teach us to serve with humility, not to seek titles or praise, but to honor you in all we do. Help us follow Christ, our true teacher and Lord, and lead with hearts full of grace and truth. For the greatest among us is the one who serves. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Wednesday. Reminder, we're not here Friday. It's Good Friday. Okay, let me give you these numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 209 points. The NASDAQ down 354. I'll tell you why in a minute. That's a little over 2%. S&P 500 down 65, 1.25%. And the Russell 2000 down 9.5. In the commodity basket, crude oil up $1.24. I'll explain that too. Trading 62.57 last. That's a gain of a little over 2%, or $1,250 per contract traded. Gold up $102.40. That's a little over 3%, trading 33.42 last. Now I'll let you do the math. When the price of gold moves $1, that's worth $100 per contract traded. So you take that $10 or that $100 and multiply it times $102. Yeah. Silver up 57 cents, trading 32.87 last. That's a gain of over 1.75%. The Asian markets at the close. Nikkei down 347, 1%. Shanghai up 8. Hang Seng down 409, almost 2%. And in the European markets at the close, FTSE up 26, the DAX up 57, the CAC down 5. So we had a mixed day in Asia. It was a mixed day for the UK. But at the moment, it is definitely a red radio Wednesday here in the US of A. So let's look at the news. President Trump yesterday suggested he could revoke Harvard's tax-exempt status and classify it as a political entity after the university said it wouldn't comply with requests to overhaul its policies and programs. Trump's comments came a day after his administration said it would freeze $2.26 billion of Harvard's multi-year funding, highlighting a broader conflict over academic independence and federal oversight. Now, Harvard has an endowment in the billions of dollars. So why do you, the hardworking, tax-paying, middle-class American, why should you send them $2.26 billion, whether they comply with the request or not? A little bit ridiculous, don't you think? Oh, and what does it cost? 80 grand, 100 grand a year to attend? They got more money than they know what to do with. Maybe that's why they're taking the stand, because they know they don't really need the money. Trump's also pressured at least 6 other universities, including Columbia. Columbia did the smart thing and conceded to a list of reforms last month. You want to know how big Harvard's endowment is? $53 billion. That's B as in billion dollars. About 20% of which can be spent at the school's discretion. Nobody's got to approve it. They just spend it. At least 3,700 people were hospitalized with respiratory issues in Iraq this week after a large sandstorm swept across the region from Saudi Arabia, filling the skies with an orange haze and reducing visibility to only half a mile. Much of Baghdad, including airports and highways, have been shut down since Sunday as the tiny particles forced everybody indoors. Sounds like one of those plagues God sent to Pharaoh. History does repeat itself. Nvidia stock sank as much as 6% earlier today. Oh, it's now down 7.5% after the AI chip maker disclosed that it would take a $5.5 billion hit from the U.S. government's surprise new controls on its semiconductor exports to China. Well, maybe Harvard will loan them a few bucks. Nvidia said in a regulatory filing last night that the U.S. government informed the company it would require a special license for exports of its H2O chips made specifically for the Chinese market to comply with U.S. trade rules. Notably, no licenses for GPU shipments into China have ever been granted, given the U.S. government's concern that the chips could be used to build AI supercomputers in the country. Nvidia now down it's down $8.39, $8.35 a share, trading $103.90. U.S. Treasury Secretary Scott Bessent has a message to powerful public company CEOs. Stop worrying about the tariffs and just go back to business. We're going to have a lot more clarity on the way forward over the next 90 days, Bessent told Yahoo Finance in an interview yesterday. Bessent was responding to a question about CEOs voicing concerns about the Trump administration's trade policy. Some top leaders have expressed that the tariffs are putting their businesses into a state of chaos. How long has the tariffs been in effect? Really? And you're already feeling that much pain? Really? That's a whole lot of something over nothing. What else we got here? Gold has surpassed the Magnificent Seven tech stocks as the most crowded trade on Wall Street, as the precious metal surged to record highs this year amid volatile markets and an uncertain economic backdrop. According to the latest Bank of America fund managers, in a survey published this week, nearly half of the fund managers surveyed, 49%, see long gold or bets that gold prices will rise as the most crowded trade in the market right now. This marks the first time in 2 years that fund managers did not see the Magnificent Seven as Wall Street's most crowded trade, according to the survey. I'm really sad that John and Dr. Tom, both huge gold bugs, didn't live long enough to see this, because they've both been calling for it for years. Retail sales rose more than 1.4% in March, matching forecast and serving as the best reading in over 2 years in the latest sign of the U.S. economy's resilience before this month's sweeping reciprocal tariff announcements. Headline retail sales rose 1.4% in March, matching economist expectations, and well above the 0.2% increase seen in February, according to the Census Bureau data. This was the best monthly increase since January of 2023. And crude oil, rising today on the prospect of a de-escalation in the trade war between the world's two largest economies and a stall in nuclear talks between the U.S. and Iran. So now you know why crude is up today. China has said they're ready to come to the table. Now, a couple days ago, they weren't going to do it. Now they say they're ready. When you get into somebody's pocket, you get their attention. Just got to squeeze a little. Okay. Let's do. Let's do Logic 247. Our 24/7 around the clock E-mini alert service. Not just E-minis, but also crude, gold, and silver. Over the last 350 weeks, we have issued over 19,300 individual handcrafted alerts. In fact, we're closing in on 19,400. What we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap this morning at 6:30 a.m. Eastern. So of course some things will probably change over the course of the day. So she will update it this afternoon or early evening, as she does each day. I think Wednesday's the day she has to take her grandson to basketball, so might be a little later than normal today. At the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 29 Logic 247 alerts. We're still waiting on the outcome of 4. That gave us 25 actionable alerts, of which so far nothing has stopped out. Have we ever had a week where we ended with zero stopped out? Yes. It's a very rare occurrence. So I don't expect it to be 0% by the close of business Friday, actually tomorrow. Uh, well, futures are going to trade overnight, Thursday night, and they'll actually trade up until about 12 noon on Friday. So, yeah, we'll see how we end up the week, but so far, I got no complaints. God is good. Now, each logic alert has an entry price, an initial target, additional targets, and a final trade to target. The purpose of the alerts, yeah, you can trade them, but the real purpose is to help you learn how to read a chart. If your goal is to trade for a living, you want to be able to look at any chart, any market, any time frame. And with the use of our humble indicators and weekly zones, instinctively know what the next high probability move is and where the market is most likely to run into potential resistance and also potential support. In doing so, you reveal the windows of opportunity that lie between those two very important points. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., but our original alert service, long before we had Logic 247, the concierge trade alerts, they're different in quite a few ways. Primarily, they don't come out around the clock. They're posted as a static report shortly before the Globex open on the evenings when I'm able to. So last night I put a message in the discussion group in Telegram that said CTAs are scheduled for 5:55 p.m. And on the days when I'm not able to get them out 5 minutes ahead of the open, I also put a note in the discussion group. On this day, I said the CTAs will not be out at 5:55 p.m. Eastern. So we all know today's the Wednesday session, but the Wednesday session began last night at 6 p.m. Eastern. All of our members and all of our trial members had all of these targets 5 minutes before the market opened. S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So, with that, we can go take a look at the daily chart of the S&P and get that big picture look. Now, blue and climbing has entered the picture. Here's what happened the last time blue and climbing entered the picture. We got a retracement right back to the BBC. The green line's called the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. And whether you're pulling down from above or pulling up from below, the pullback holds more often than it doesn't. Like here and here and here and here and here and here. And basically here, although we didn't quite touch it. But yesterday we said if we traded through support at the step line, the next area for major support would be at the 38% reverse fib. And that's where we're sitting. Now the fact that we have blue and climbing in the picture, once the market digests all this NVIDIA news that's putting pressure on the markets, we'll probably take another run at the daily BBC. Could price come down and find support at blue and climbing? Yep. Could price come down and trade through blue and climbing? Yes. So the support level right below blue and climbing would be the 24% reverse fib. So how we close today will be very important. And the markets tend to rally going into a holiday weekend. So keep that in mind. We seem to have found some pretty solid support here at the 38. As we move into the afternoon session and then tomorrow's session, I would not be surprised to see price back at the BBC. If we trade through the BBC, then we got the 50% fib right there. And that's a big deal on any market on a daily chart. Institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. I highly encourage you to spend 2 minutes with the daily chart of whatever it is you're about to trade. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. So by spending just 2 minutes with the daily chart of whatever you're about to trade, you're getting a free look over the shoulder of the deep pockets that actually move price. You're also able to identify major areas of support and resistance and support. So where's the next resistance? Well, that would be the high of today, 54.25, and then the high of yesterday, 54.85, and then 54.97. But the BBC has actually dropped below this high, so the next resistance would be the BBC. Once we take out yesterday, first we got to take out today's high, then yesterday's high, and then currently the BBC is at 54.89. Okay. All right. Now, all 30 minutes are all alerts, both logic and concierge, are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose years ago. And they say if it's not broke, leave it alone. So I have. The vertical line separates today, Wednesday, from Tuesday, Monday. These are the weekly trading zones. Okay. This is 53.44/45. This one's 54.69/54.70. When price rises to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. So here it is, Wednesday, and the zones published Monday morning at 6:15 a.m. Eastern. Still doing their job. Resistance to support. It's a lovely picture. You could frame that and hang it. Now, we've published the zones every week for our members and trial members since December 14th of 2009. This last December marked 15 years. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, with the current volatility and earnings, I think I'm going to pass for the next week or so on publishing the CTAs ahead of the open, because as you can see, last night price gapped right down to the short target. Okay, under normal market conditions that wouldn't happen, but as you can see, these windows fill just fine, and this window fill fine, this window fill fine, literally to the tick, and then did it again. Okay. Now, gap lower open, the gap filled right here on this spike. Now this high, if you look left, you see all these lows right here, you see all this support? That's market structure. That support became resistance. I don't know how to make it any clearer than that. So gap lower open, we're below the BBC, we expect lower prices. When price is above the BBC, we expect higher prices. Higher prices. Once price gets below and you have red and falling as a bonus, you definitely expect lower prices. And like a heat-seeking missile, it ran right to this weekly trading zone, 53.44/45. Support bounced us up into resistance at red and falling, which sent us back down to the zone support. Now this time, buyers came in. This was off the London, an hour after the London Open. We caught a nice bounce, and it took us all the way up to the short target, we spiked. We gapped open below the short target, but we spiked above it here to close that gap. Okay. Now, this was a huge green candle all the way up. But by looking left, you should know that that area right there is potential resistance. Why? Because previously it was support, 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 support. And price got below it. So when price returns to that area, that's just how markets work. So from that point of resistance, the market goes looking for support, which it found at the BBC, gave us a bounce right up to the underside of the short target. I've explained a number of times when we trade through a short target or a long target, and then price retraces, that target will often become, in this case, resistance. Okay. So what did that do? That sent the market back down to almost all the way to the zone. What was the low? 53.46. The zone is 44/45. Okay. So that support sent us back up. And we got a high here, 54.01. And look at these highs right here. You see that? Resistance, resistance, resistance. Okay. And what's that going to do? That's going to send the market looking for support. And where do we expect support? At the bottom of this window. Possibly all the way down to the zone. On the Dow, gap lower open, and in the first 30-minute candle, remember these targets were published 5 minutes ahead of the open. So we opened here, gap lower, and we ran all the way down to the short target. Spiked it a little bit, okay, and then bounced. Support will do that. We hit resistance right here. Look left. Back down to the target. Another bounce. This time, This area right here, we're back down to here. So we got a double bottom here. Buyers came in early here, drove us up, took out this high by a little bit. That little wick, that's a little bit. Okay, we're always suspicious of just a little bit. Price is not proving itself when it does that. And all these wicks sticking up to the upside should have you on the lookout for potentially lower prices. And so we're back down to the short target again. Earlier we would have looked for support here. Now we look for support here. That would be about 42.60 to 42.30. It's 30 points in that window. You only need 20 points to get your goal for the day. On the Russell, gap lower open, but the initial candle took us down here, okay, just above these highs. Obviously the short target was based off this low right here. Buyers came in, drove us back up, so we get a lag and a retracement. I'm sorry, hold on one second. Bat phone. My apologies. All right, here's where we opened on the Russell. Came just shy of the short target. Okay, but plenty of room to get your goal for the day. And then we hit the BBC and the zone. So that's resistance times 2. That sends us all the way back down to here. Okay. Which bounced us all the way up to here. This high right here. We overshot that high by just a little bit, right? So resistance, we didn't quite make it all the way to the target. I was keying off this one. I thought the market had enough strength to get there, but it only made it to this high right here. So resistance is now going to send the market looking for support, which it finds at the BBC, bounces back to the zone, and consolidates. When price encounters a weekly trading zone, 70% of the time you're going to get consolidation, 20% of the time rejection, 10% of the time the slice. Okay, so we go back to the short target, support, back to the zone and this previous swing high. Okay, so you got a double top right there right now. And where's price? Below the BBC. You've got a double bottom basically right here. And so 18, yeah, I would pass on that. I would wait and let price get down to this window here. Okay. On the NQ, gap lower open, so we gap below the short target, but then we came back and tagged it right to the tick. Okay, so we come down to the zone, we consolidate, we get a bounce. The pullback holds, even though this was a green candle all the way up to the underside of the short target. The pullback held because the candle's still touching the BBC. So the step line crosses blue and climbing. We get back below the BBC and we're widely consolidating at the zone. Your resistance is here, look left, and your support is here, right here. So 18.5, 18.539 down to 29. That's $200 per contract traded. Crude oil, here's where we opened. We dropped to the BBC, but blue and climbing is directly overhead. That big one that gets directly above price, then it becomes potential resistance because it's probably on its way to turning into red and falling, which is what it did. So we came down to the short target. Buyer stepped in a little bit early. Pushed us up to the BBC. Once again, the pullback holds. And that sends us all the way down to here. Whenever you have a bullish cross, that's when the blue line gets above the green line. A bullish cross that leads to an extended move. The first time price revisits that area, look at the horizontal line. Okay, the low of this candle is right where that bullish cross took place. See that? That's very important. Does it happen 100% of the time? No. Does it happen more often than not? Well, you see it here every day, practically. Okay, so support now is going to send crude looking for resistance. So up we go. We got that perfect stack. Price, step line, blue and climbing, BBC. And we run right up to the long target. And we overshot the target by a little bit. Okay, so we back up, make another run. Okay, then we get a retracement. Now we traded through the long target, and you see how on the pullback The long target became support. Then we got another leg. We got a retracement. Step line is on the right side of blue and climbing. Has been for a while. Blue and climbing is directly overhead. So is the step line. That's potential resistance. So at this point, you should look for a retracement back to the BBC. If we consolidate sideways, then the BBC will rise to meet price, which is a different dynamic than price dropping to the BBC. Gold. Historic day for gold, I would think. This was the opening candle. Overcame the long target early on. Flew through this zone. Now this is a slice, 30-minute candle. Sliced through the zone like it wasn't even there. But when it ran out of steam, it retraced back to the zone it sliced through. And continued in the direction of the slice. So we get a little consolidation here. Obviously, these are not normal market conditions. There's so much fundamental stuff that's going on right now. We typically ignore fundamental stuff because we're technical traders. But with all that's going on in the world today, you never know at any given moment when there's going to be a post, true or not, it's going to send the markets reeling, spiraling up, spiraling down. That's why I keep saying, be careful out there, maybe go on vacation. Here's where the market opened last night on silver, and it ran right up to the long target. Spiked it, pulled back to the BBC, the pullback held, and we got a leg and a retracement. And see how the top of that long target became support? Set us all the way up to the zone at 3305/06. We've got a retracement and a leg and a retracement. And we've gotten above red and falling. Okay. But you only need 2 pennies in silver to get your goal for the day. So I would wait for an opportunity at about 3302 up to 3305. That's 3 pennies. That's $150 per contract traded. So Michael's here. He's going to give us a recap of what happened this morning in the live training room. Watch this, guys. See if price is able to break that 38% reverse fib. Blue and climbing is down here lurking as support if it does. Okay. All right, Michael.
All right. I'm glad I saw that right there. I was just wondering about that. We were on the day. All right. Here we go. Everybody ready?
Yep.
All right.
Yep, looks good. Go ahead.
Good. All right. All right. Good afternoon, everyone. Today is Wednesday, the 16th day of April, 2025. Now, if you have not taken a free trial, let's go to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. When you click on it, it will bring you to this registration page. On this page, all we ask for is your name, your email, and your phone number. Down at the bottom, make sure you give us your TradingView login ID. Okay. If you don't have one, click this button right here to figure out how to get one. Give us your TradingView login ID when you get it. Right. Once you get that, we can get your charts indicating, your indicators indicating on your charts. Right. We had a pretty good day today compared to yesterday. It was much better, but I'm still on the month. Well, it's middle of the road on the month, really. But it was pretty good overall. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 16th day of April, 2025. We had 78 ticks on the NQ. We did trade the NQ today for the first time in a while. 56 ticks, the first time since the tariffs, really. You know, the tariffs came out right here, and it was just too wild to do. It was even pretty wild today. That's why I only did a few trades on it. But we had 78 ticks on the NQ, 56 ticks on the Russell, 44 ticks on gold, and 63 ticks on the ES. Put us at $1,897 on the morning session. Today, it took 4 minutes and 2 trades to get to the goal for the day. At that point, we're up $2,250, and we took a total of 37 trades this morning. So on the month, we're at $21,927 over 10 business days, averaging $2,192 per contract per 2-hour business day. On the year now, we're at $106,215. Over 63 business days, averaging $1,685 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and you were to add 1 contract per month, so far this year, you'd have only had to work 8.61 hours, so 8.5 hours, and you would have earned $23,732 so far. That's the profit you would have earned if you did it just like I did and quit trading when you got the goal for the day, like I did not. But if you would have done that, then you'd be up $23,732 so far, averaging $2,754 per hour. That is a good number right there, $27.54. That is an awesome number. If you could get that on a regular basis, well, heck, you only need to work a week a year. Anyway, let's get into it. Let's start out with the NQ because we only had 4 trades on the NQ, and they were at the beginning of the session, so we can hopefully get back to that pretty quickly. Here we are. The first trade we took on the NQ was right here. We picked up 75 ticks on that one, and then we had a break even there and a break even there. And both of those break evens went a lot into profit. This is why I stopped trading it, because they went a lot into profit and I ended up with a break even. It was jumping around so fast. I think both of those went plenty into profit. It's a 50 range bar, so they went about 40, 50 ticks into profit, and I still did a break even. On this one, we got 3 ticks in profit, and then I stopped trading the NQ. Just to look at it, if you were being aggressive with the NQ, which you really didn't need to be, but if you were being aggressive with the NQ, so you're being aggressive with the trend, right? That means if you're below the YBR, anytime it goes into the oversold, you're going to buy the open of the next bar, right? So you'd have bought the open of that bar, a 60-tick stop would have kept you in it. You would have bought the open of this bar, would have been good. You would have bought the open of this bar, would have been good. You would have bought the open of this bar, would have been good enough. And then you would have been selling. The open of would have been good. You would not have done this one here because it didn't make it down into the oversold. Then you would have been buying the open of this bar. That would have stopped you out. So all those ones that I said would have been good right there, hundreds and hundreds of ticks total. And then you finally had to stop out over here. And that was all in the first 15 minutes. So there was a ton of opportunity in there today on the NQ. And that's if you were doing the aggressive trades with the trend. I mean, even right in here, the aggressive trades with the trend. When it gets into the overbought, right here, you'd set that one would have stopped you out. The next one was right here, 48 ticks on that one. Next one was right here, 50 ticks or more on that, more than 50. The next one was right here, 50 ticks or more on that one. The opportunity is there. It's just the NQ was so wild today that I took 4 trades, got what I wanted, and I quit. I will add it back to the group here pretty soon. Okay, once there's a little more liquidity in it. All right, so the gold. We did have a bunch of trades on gold. I mean, we had a bunch of trades today compared to yesterday. We had a bunch of trades overall. Our very first trade was right here on gold, and we stopped out -15. And then here we picked up 6 ticks to get us to -9, and then 25 ticks to get us to 16. So we hit the target on that one. 25 ticks to get us to +16. Had a break even. Then here, I was saying it should get down to here, and you got pretty close to there. From 16, we went to 17, so we had 1 tick profit on that. At 17, we went to 33. And from 33, we went to 34, and 34 we went to 44. A couple of break evens, then a stop out. Brought me down to 29. And then we had a break even and a +5 to 34 and another +10 to 44. And that is where we ended. I guess that's not where we ended. We had a break even in there too. Okay, so during the break, this is on a 9 range gold. Okay, a 9 range gold. You can see there were a bunch of opportunities here. If you were just going long and you were doing conservative trades, which is what we're doing on the gold, you just be looking for it to come out of the oversold when you're when you're above the YBR. So right there, right there, right here. I think it would have been that one right there. You would have bought that right there. I don't know if that went enough to stop to break even. If it didn't get to break even, you would have stopped out on that one. You would have skipped that one. Then you would have done this one right here. That would have been a break even. Then you had to wait and do that one, and 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 that one. And then it got below the YBR, so you would have shorted right here, which would have been just enough for a break even. And then it flipped back to above the YBR, so you would have gone long on this one. Should have been good. Long on that one, and that one, and that one. Then you get back below the YBR, so you would have gone short on that one, and that one, and that one, and that one right there would have been your last short on the white on that. And flip directions again, you would have gone long on that, and recently long right here. So gold had a bunch of opportunity today, and we ended up with plus 44 ticks in gold. Okay, the Russell also had a bunch of opportunity, and we talked through a lot of trades this morning. So the Russell, it's not that much. The Russell slowed down. We do have Powell talking. I think Dwayne mentioned that a little while ago. On the Russell, we started out here with a plus 20, then we stopped out minus 25, so we were minus 5 at that point. Then we went from minus 5 to plus 15, so we had a 20, then we stopped out again. Oh, wait, I didn't put that in there. Oh, we got, yeah, that was a plus 5. Okay, that was a plus 5, so that got us to minus 10. And then we stopped out here, and for some reason I put that down to 0. Then we had a break even, and we went from 0 to plus 5, then to plus 15. And then from 15, we went to 26, then 26 to 46, and then 46 to 56. And that was where we ended it. Now, doing the conservative trades with the Russell, after that one, you would have had one more right here. That would have worked out. One more right here. That would have stopped out. And then your next one would have been a short right here. That would have done okay. Your next one would have been a short right here. That would have stopped out to the tick. Then a short right here that would have worked out. A short right here that would have worked out. And you're about to have another short right in here. And that would be all on the Russell. Okay. The ES. Now we had a fair number of trades on the ES today too. Let's take a look at that. Slide that all over here. Now on the ES, we were being aggressive with the trend. Right after we got to this point right here, and I saw how choppy it was, then I said we're going to be aggressive with the trend. Now the difference with the trend means you're going to go in one direction, right? Aggressive means you're going to go when it goes into the overbought or into the oversold and not wait for it to come out. All right, because right in here we weren't getting very many flat spots. That's where I decided to change the tactic. So this first trade right here, we picked up on the ES, we picked up 20 ticks on that very first trade. Then we had a break even and another break even, and then we got to the aggressive trades right here. Picked up 8 ticks that brought us to 28, and then another 8 ticks right there that brought us to 36. And then this right here should be the other color blue. Sorry, it should be the other color blue. I picked up another 8 ticks to get us to 44. And then 7 ticks here to get us to 51. And then 12 ticks here to get us to 63. Okay. And we had a break even right there. So the difference, what's it look like with ES NinjaTrader? I don't have this stuff on NinjaTrader, so I don't know. Bob. NinjaTrader's only got the old school stuff. I didn't put any of this stuff down here. None of this is on NinjaTrader. All right. None of these labels or anything like that is on NinjaTrader. The YBR is on Ninja. That's all you have on Ninja is the YBR. Okay. And you can see the ES didn't give that much during the break here either. It got really choppy and sideways, but doing the aggressive trading with the ES, after this last one, you would have had to have it go all the way up into the overbought and then come out of the overbought. So you would have had one more aggressive long trade right here that would have been a break even. Then you wouldn't have traded again on the long side. You would have gone short right here, aggressively short right there. That one could for at least 19. You would have aggressively gone short again right here at the close of this bar. So you'd gone short right here. That would have given you something. It went 10 ticks this way before it pulled back up. So that was enough to get the stop to break even. Or even if it pulled back up this way, it didn't hit your stop because it only went 15 ticks that way. Your stop is going to be 25 ticks on this. So you would have had that move down to there. Then the next one was right here. Oh wait, you couldn't have done that because it didn't go down to the oversold. You would have had to wait until it got into the oversold and came out of the oversold. So your next one would have been aggressively right here at the open of that bar. sorry, the open. This bar closed up, so it would have been the open of that bar right there that you would have shorted. Then the open of this bar, the open of this bar right here that you would have shorted. You had to wait till it got into the oversold, so it would have been the open of this bar right here that you would have shorted. Okay. So when you're in the chop like this, trading aggressively with the trend works out pretty well. If when you're in the chop like this, you would have been trading conservatively with the trend, well, that wouldn't work out so well. Okay. Because you wouldn't have gone at the close, the down close of every one of those, the down close right there. That would have kept you out of these other trades. You'd be in a single trade all the way over to here. You'd have been in a single trade and you'd waited for the down close here. So in this one right here, you could have taken some pretty good profit. You did the aggressive, selling at the open instead of selling at the close. Right? You missed 12 ticks in profit right there if you did the conservative trade. So that brings us here. If you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button. When you do that, you're going to be sent to this registration page. Just fill it out. Once you fill it out, down here at the bottom, make sure you give us your TradingView login ID. If you don't have one, click this link right here. It says if you do not have it yet, go to there. It's going to be here. Watch this video. TradingView platform. Okay, watch that video. And when you do that, then give us your ID. All right, once you give us that ID, we can enable the indicators, get your indicators indicating on your charts for you. So you can learn to trade with us. Peter, am I finding 19 better than the yes? Only when it's volatile. You know, only when you have enough volatility to do it. I'm probably going to switch back, Peter, as volatility dies down. I'm probably going to switch back. Now, were you able to get that thing working? Do you go out there to mystonix.com, pay the $6, and try it again? Because paying the $6, it might take a little while for that to actually take effect. But you're going to have to do that at some point. Yeah, the depth of market is what I get. Right? If you want to have all this stuff in here, that's the depth of market. If you don't want to have that, you just want to have this one and this one, that's top of book. That's the difference. Okay. I use this stuff once I'm in a trade. I use this stuff to manage a trade. But if you don't use it to manage a trade, then you don't really need it. Right? But like all this stuff right here, you wouldn't have any of that. You'd only have this one right here and that one right there. You'd have the top of book. Right? That's what the difference is. Oops. Okay, if you don't use the depth of market, you don't need to pay for it. Pay the $6 and you'll have the top of book. Pay the $6. You can always upgrade to the other one if you wanted to, but pay the $6 just to get it working. All right, now there's something else that you need to know once you have it hooked up to your account and all that. To switch between live and demo, this is live right here that we're looking at. And to switch it to demo, you just click this button right here. So I don't know what yours is going to come in at. If it's going to load up with demo, if it's going to load up with live. But when you switch to demo, you got to just check that box. Okay. And now it's in demo. You see, you can't really tell the difference by looking at the DOM. But you got to click on trade and see. Okay, so now I'm back to live. Okay. Just so you know, that's how simple it is to flip between demo and live. So you want to make sure you're in the right one. Once you do get yours hooked up, make sure you're in the right one. Okay, you're in what you think you're in anyway. So, yes. So this stuff right here, the $3, you want not CFE. You don't want CFE. You want CME. CME, not CFE. And it's $2. It's not $3. And the top of book and the depth of market is like $6 or $7, I think. Okay, that's the one that you want. That will cover you for the ES, for the NQ, and for the Russell. if you just do the CME one. Okay. If you do the bundle, it'll cover you for all the other ones too, like the crude oil and the gold and all that, but you don't have to do that. Now you can just do top of book. If you almost never trade those other ones, you can do top of book on them or don't do anything on them. If you just trade the ES, just do the CME and do top of book on CME. That's probably all you need anyway. Okay. If you just want to do comics, which is the gold, and the CME, which are all the indices, then you can do that. That's just two of them, and that would bring it down from $34 to $12 for the top of book. I mean, for the depth of market, I think 12 or 14, something like that. I just do the bundle, so I have depth of market on everything that I do. Okay, those are the choices for you in here. And this stuff, CME, that's when you want. All right, and it's not going to be $0. I don't know what the deal is, why that says 0. It's not going to be 0. This is going to be 2, and that's going to be 7, I think, or something like that. And the bundle will be 35, I think, or 6. There's something that's wrong with your account right here, that these are showing zeros in there. There's something off about it. I don't know what that is. Okay, so right here on the ES, selling the open of that bar is the aggressive trend trade, selling the open of that bar right there. So you should have been short here from 359. Okay, 359 on the ES is where you should have been short from, right in there. Here. I just put it on right now because I didn't put it on a minute ago. So it's got to go it's got to go 10 ticks into profit. 10 ticks into profit because it's a 19 range. So from 59.75, it's going to go down to 57.25. It's going to get down here. Wait about the stop to break even. Okay. Now, let's talk about this trade. Let's do a little bit of analysis on this over here to the side. Or I guess I can just put it on top and stick it over here. We can watch it over there. Let's do a little bit of analysis on this trade. All right. We're below the YBR, so we're thinking short, right? Now, if we stretch this out a little bit, and you look at the leg length before it right here. This was the leg length before it. Okay, so let's draw some fibs on that leg length before it. I think it's going to be, do I have it right here? I have it right here. So this right here is really where you want to have your entry. You know, this is the retracement, so it pulled back. You wanted your entry to be here. The fact that it pulled back up above that means it's doing 100% retracement. So your entry would be better off from up here. If you couldn't get your entry down here somewhere, then your entry would be better off from up here because it's doing 100% retracement. We're in chop, obviously, so it's going up to the top of the chop, and it should push down to the bottom of the chop is what it should do right now. Now, I have a pretty good entry on that. It's a little bit better than the exact entry. The exact entry would have been right there at 59. I'm into 59.75, but I probably should have waited till it got up here to the top of the chop. All right, so from right now, if it gives a down close, it should go all the way down here to 50.75, all the way down here to 50.75. Right, so if I bump that target up, we'll just put that up at 51. Or let's put it up at 51.75, so it's a round number from here. Okay, 8 points, 32 ticks if it gets down there. Right, that's what the market should do. Last time it came up here, it went all the way down there. It's up here again, it should go all the way down there. Last time it came up here, all the way down there. It's up here again, it should go all the way down there. Now, the fact that it's going through the top right here a little bit, it's putting a wick at the top of this, is not a good thing. It's not good for the trade. So now, instead of going all the way down here, it should probably get down here to a 50% retracement of this level right now. Okay, because it's almost switching directions on us within the chop. So now you'd be looking at getting it down here to 58.25. Now that's going to put it down here. That's not enough to get my stop to break even. So we'll see what happens with this. This isn't the best looking trade to take right here, the way it all came together. Okay, if I'd have waited for it to come up to the top at 100% retracement, then that would have been a trade to take, but I didn't do that. I took it here, kind of near the open. I got a better entry than the open. Actually, the open was right here. I got a better entry than that, but now that it's starting to push down, it should push down to here. Hopefully a little bit lower than that, because that would be getting my stop to break even. So if we do the same analysis over here on gold right now, it's going to stop me out. If we do the same analysis over here on gold right now, this is what this one should do, right? You want your entry to be right about here. So I want to have a down close on this bar and possibly the next bar. And then the bar after that gives us an up close. See, it gave the up close right there and didn't give you any entry at all. None at all. All right. You following along with all that? High impact out at 130. Yeah, that's when Powell's supposed to start talking, right? Now, yeah, I don't know. Let me go look that up. Let me go look that up and see if I can find that. We used to get that. Yes. Okay, Peter, it may take some time for that. Did you pay that fee, the exchange fee? It may take some time for that to register, if you did pay that. Okay. They say it could take up to 24 hours for that to register. All right, so we did stop out on that ES trade. And what I was going to look for, what did I used to look at, Dwayne, for news? Do you remember? Investing, did they give, that's what it was, Forex Factory, because they used to tell me where the speech was, the audience, all that. Oh, do they? Okay. Okay. So today, Wednesday, 1:30, Fed Chair Powell speaks. If I click on that, it says, due to speak about the economic outlook at the Economic Club of Chicago. So it's probably not a big deal. Yeah. Nope. Nope. All right. So the ES, I'm surprised it stopped me out there. Did I do that right? You could. Yeah, sure will. That is true. Oh, I messed up that trade somehow, guys. I ended up getting out with, I sold it at 59. I ended up selling it at 59.75. So I had a 3-tick stop out on that. I should have been in that trade still right now. I should be going to break even on it. And I ended up having a 3-tick stop out on that. I don't know what I did make that happen. And I know it's listed as high impact. They usually put high impact whenever he talks. So I don't know what it's going to do though, Michael. I don't know that it's going to have a high impact effect on the market.
Because you never know what he's going to say.
You never do. You never do. It's like anytime Trump talks, you never know what words are going to come out of that mouth. And for us, you're hoping they're going to be good for the consumer, not just for us traders, but for us consumers. All right, so we're at a pretty good spot here for a trade to trigger on the Russell. Right, we're at the 50% retracement of this leg up. It's going to put us up here. The entry point will put it up here, which isn't the greatest, but it's got enough room to take some profit and bump the stop to break even on an up close on the Russell. So you're at 80.7 right there. So you'd be buying right there. You'd be buying right now. No, 82.7, right? Again, so it'll be 82.7, I think, is what we're going to be looking for.
Janet Yellen spoke yesterday. She's starting to sound like Pelosi.
A little crazy, a little cray-cray.
Yeah, she should enjoy her taxpayer-funded retirement.
Yeah. Okay, get some bats up in the attic. Lying around. All right, so 82.8 is what we're looking for here on this right now. Okay, and up close at 82.8 on the Russell would be a valid trade. Now the ES, I screwed that trade up. I should have still been in that or got my stop to break even on it. I don't know what I did when I went over to find that Forex factory thing. I clicked somewhere by accident and I got myself out of it with 3 ticks stop. All right, so this is down to 80.5 now, so we got to drag this down to 82.5. Sean, are you in here right now? Sean is not in here. Robert M. I haven't seen you in the morning session, Robert M. Did you not get an invite? That was a mistake if you didn't get the invite. I'm sorry about that. That should happen automatically. And Michael R. We said tomorrow, right? Did we say tomorrow? Okay. Okay, Robert M. If you go out, okay, all right. If you go out to the website, we're going to get long here. I think we just did get long. I must have had my order in the wrong place because we're long already. It's going to go see up close and it'll be a good trade anyway, I think. There it is. Okay. So this needs to go 10 ticks into profit. It needs to get up here to 83.5, which it should do pretty quick right here to get the stop to break even. Should bring us up here above the prior swing high at 84.8. Robert M, just go out to the website, go to mytradingq.com and sign up for the trial there. Okay, I think it'll send you something. I'm not sure. It'll probably send you the invite and stuff to get in there again. Okay. It's got to get, there it is, stop to break even on this. I was thinking it should go up to there pretty quick, and it should get all the way up to the prior swing high right now at 84.8. So I'll throw a target up here at plus 20. Okay, I'm just dragging this down to plus 20. So I'm not being greedy. There we go. So my stop's going to be at plus 2. And I'm going to get 2 or 20 out of this. We should get all the way up here, though. We should get 20 out of this. All right. Nothing on the ES. There's nothing over here on gold either. Now that ES trade that we did take in here that I ended up losing 3 ticks on, that did end up working out. It shouldn't have stopped me out way up here. It shouldn't have stopped me out right there with 3 ticks either. Okay, with this, I'm going to bump in 10 right now. So we'll get 10 or 20. The yellow is the one. All right, 10 is what we ended up with. Okay. Robert M, because your indicators are still working, right? It should have worked up until today, I think. I remember it was last week at this time that you finally told me you were using TradingView as well as Ninja.
It's the same link and the same password all week.
Yeah, but he didn't get it. So So
Well, when you
should
go,
have automatically sent it out to him this week because he only had 2 days in the trial last week. So I should have sent it out to him this week, but it didn't.
that's probably in the spam folder.
Yeah, probably. All right. So we're getting another shot at this. It didn't go into the overbought here on the yes. All right. And the YVR just flipped down here. This is almost a trade here on the gold. We need an up close on the current bar. That'd be a pretty good spot. Be about right here. It's better now if we get the up close. Now that it's gone down a little bit deeper. All right. And if we got it right now, that would be a pretty good spot for it. Well, not great. I mean, no, it's not. Now let's flip the YVR the other way, so we're not going to have anything on the long side. And all these marks, oh crap, it's 130. I didn't realize that. All right, well, we just ran out of time, guys. So we did make some money on the Russell trade. We ended up messing up the ES trade. We lost 3 ticks on the ES trade. But we're going to wrap it up for this session. Let me just do this. Today in the room, we're up $1,897 a contract. On the month, we're up $21,927 with 1 contract. On the year, $106,215 with 1 contract. If you've not taken a trial with us, go here to mytradingiq.com, click on the purple button, no card required for the trial. That will bring you to right here. All right, fill out this form. Once you fill it out, give us your TraderView login ID, and we get your indicators indicating for you today. All right, that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. And Dwayne, if you are ready, oh, that was my alarm. There it is. Okay, Dwayne is ready. It's on the way.
Recap of the morning session.
Today it took 4 minutes and 2 trades to get to $2,250 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, we covered all the markets already. We have now traded below that important 38% fib retracement. Now, here's the thing. It's where we close that will be really important. We got major support down here at blue and climbing. Do I expect we'll drop that much today? I don't think so. But you never know. Now this morning in the discussion group in Telegram, I put in this window of opportunity. And so it gave some points, and it gave some points, and now it's traded all the way through. And it's at the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Potential support here, 52.89. And then blue and climbing is currently at 52.36. And it looks like it wants to head that direction. So on the 30-minute, that would send us to the next potential zone below, which is at 52.64/65. And so, to become a member, send an email to support@cfrn.net. In the subject line, just put "I want to become a member." In the body of the email, put your name, your phone number. We'll send you an email that explains what it means to become a passport holder. Obviously, you get 2 hours of live training every trading day. That's in an interactive environment. You also get private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's why it's important to learn how to read the chart so that you know where to expect support, where to expect resistance. And based on the last 19,300 plus individual handcrafted Logic 247 alerts, we know that after doing our best work, about 20% of the time or less, we're going to get stopped out. If you're chasing that holy grail, that 100% never gets stopped out, I know the emails show up in your inbox every day. You go to the websites and you drool. It's all a fantasy. It's fiction. It doesn't exist in the real world. So get your head out of that and figure out how you're going to actually learn how to trade. The only secret in the world of trading is to be successful. You got to learn how to trade. No gimmicks, no parlor tricks. Learn how to read the chart, understand what market structure is, and then act accordingly. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. And as I said earlier today, probably for the next 2 weeks, I won't post them 5 minutes ahead of the open. Because like last night with the NVIDIA news, we gapped lower. We gapped all the way down to the short target on the open. So that doesn't really benefit you. So we'll let things settle down. And then I'll go back to that 5 minutes ahead of time. For years I did it. For many years I did it after the open. But doing it before the open under normal market conditions works out pretty good. Gives you an opportunity to get your goal for the day quite often in the first 30 minutes. So for now I'm going to put that on hold, and when you should expect it again, I'll be sure to let you know. As a passport holder, every Monday morning you'll get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members over 15 years, every week. Price drops to a zone, you expect support. When it rallies up to a zone, you expect resistance, until proven otherwise. As a passport holder, you'll be able to attend the members only workshop every Thursday night. Friday's a holiday, so we're probably going to take tomorrow night off as well. We'll post the official decision in the discussion group in Telegram once we make it. And as a passport holder, you get the golden key that opens all the private channels in Telegram. When you're on the trial, you have access to public channels, but once you become a member, then you have access to all the channels. Everything a trader needs, all under one roof, one low price. Somebody made a comment to me the other day about the exorbitant cost of learning to trade. Most places who don't give you half of what we give you, 10 grand, 20 grand, if that's how you want to fly, go ahead. But I bet you're going to end up back on our doorstep. Once they've wrung every penny out of you they can, after they're done charging you to trade in their simulator, you'll end up back here. Because nobody else does the things that we do. So, anyway, you know what to do. Send your email, or we'll get you in the fold. All right, good word for the day. Embracing uncertainty and following God. Isaiah 55:8. For my thoughts are not your thoughts, nor are your ways my ways. A part of us feels as if something is spiritually wrong with us when we experience uncertainty. But that is precisely what Jesus promised us when we are born of the Spirit and start following Him. John 3:8. The wind blows wherever it wants. Just as you can hear the wind, but can't tell where it comes from or where it is going, so you can't explain how people are born of the Spirit. When it comes to being led by God's Spirit, the operative phrase is, you can't explain how. Even when you have given your best thinking to the problem, the Bible says again in Isaiah 55:8, my thoughts are not your thoughts, your ways are not my ways. So when you follow God, anything can happen. You never know who you will meet, where you will go, or what you will do. And the sooner you come to terms with that spiritual reality, the more you will enjoy the journey. To do otherwise is to end up with a self-absorbed spirituality that leaves you feeling empty. Instead of following the Spirit, you're inviting the Spirit to follow you. Instead of serving God's purposes, you want Him to serve your purposes. While this may seem like a subtle distinction, it makes an ocean of difference. Here are your choices. Number 1, follow the path of certainty, which keeps you in control, but robs you of the adventure God has in mind. Number 2, accept the uncertainty of the how and when that comes from following God, and stand on this promise from Lamentations 3:23. They are new every morning. Great is your faithfulness. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.